Hi, this is Dan Collins coming to you live once again from Traders Expo Chicago. And joining me is an old friend, Andy Strasman, who is a registered CTA. His CTA is Totem Asset Group. And in addition to his CTA, Andy is trying to bring, and it's a trend following CTA, some of the knowledge of trend following to a broader group. And he has a program called the 40 in, 20 out. Explain what that is, Andy.
Well, it's a pleasure to be here, Dan. It's great to see you as always. So what we did is every minute of every trading day for the last 5 years, we've been assessing the signals of a very simple trend following program or approach. And what we're doing is we're generating these signals and we're monitoring them from cradle to grave, and we're computing the results into a transparent index of CTA trend returns. That's in simple. That's kind of what we're doing with this academic project.
Yes. And in the investing world, what we've seen in the past 5 years, what a lot of people have been trying to do is kind of create some sort of a benchmark for trend following, or what they call a managed futures beta. This will kind of give people the idea of what's.
Absolutely.
Yeah.
So actually this is kind of the genesis of why we thought this would be an interesting project to take on. Okay, if you go back in time, most of the CTAs used to take a trend following approach. Somewhere around $1 billion, you run into capacity constraints. So CTAs then morphed into something else, more like a multi-strat. Many of these indices consist of these very large managers of $2 to $35 billion. But a less and less part of their assets under management are devoted to trend. So, and these are the main constituents in the common indices that we see to generate that beta that you're talking about. So we thought, like, if you were going to look back over time, it used to be trend, now it's maybe 25% trend. So you're losing a lot kind of in the way that the big shops have kind of morphed into multi-strat. So we wanted to be able to capture what is trend doing. It's very hard to say what trend is doing, i.e. beta, using the more common indices that are out there. So,
yeah. And it's very interesting because people, even the business media has a hard time understanding it. Every week there's a story about why do these people like this, and they'd call them quantitative hedge funds, yeah. And they don't seem to understand the concept. They don't like something or not like something.
Yeah, I agree. Now, it's very easy to compute your alpha in the equities markets because we have a consistent beta, which is the S&P 500. It's very difficult to compute alpha in the managed futures or CTA space because we don't know really what beta is.
Yeah, that's fascinating. We're going to be back with more with Andy Strasman after a quick break from Traders Expo Chicago.